All right, greetings everyone. So I got a few requests from folks. A lot of folks sent me an email asking if I could basically record a live trading, one of my options trades that I do throughout the day or throughout the week, really. So that's what I've done here. I recorded a options trade that I'm in on the SPX. So today is September the 15th. It's approximately 12:30 p.m. Eastern Standard Time. And so what you guys see here is essentially, so here is the SPX. Uh, Here is the SPX. So the SPX is the index that tracks the S&P 500. And so for the S&P, for the SPX, they actually have expiration dates throughout the week. So every day of the week, you can trade the SPX. And for those who understand options, you know that an option contract, one of the components of an option contract is that it has an expiration date. So the expiration date on this trade is today, September the 15th, right? And so, as you can, so this circle here represents the current price of SPX, and as you can see here, I have on two positions. Actually, I have three positions on. All right, so I have a vertical put credit spread where I sold the 38.55 for six contracts, and I bought the 38.45 right for the same number of contracts. So that creates a vertical spread, and it's a vertical spread because each option contract has the same expiration date. And so on the call side, so this here is the put side, reason why it's called a vertical put credit spread. And it's called a credit spread because I've actually taken in money versus buying a debit spread where money goes out. I'm not going to get too into the weeds of, how to trade options and what certain things mean. I just want to show you guys, give you guys a visual representation of how an options trade look. And so here is the call side, and as you can see here, I sold the 39.60 call option, and I bought the 39.65 call options for five contracts, right? So this here is considered a asymmetrical or a unbalanced iron condor. It's unbalanced because I have six contracts here, right, that make up this put credit spread, and I only have five contracts here, so it's unbalanced. However, earlier today, I put on uh, a call credit spread at 40.20, where I sold the 40.20 for four contracts, and I bought the 40.25, right? So now I have two positions on the call side and one position on the put side. And so right now, the credit that I took in for those three positions is $295. So as you can see right now, my P&L, my profit and loss statement is showing red because it's negative. So I'm actually down. It's going up and down here, but I'm actually down. $17 right now on a trade. But if we look at the trade itself, we can see that the price of the underlying is exactly where we need it to be, right? So it's right in the middle of the vertical put spread, vertical put credit spread, right? Vertical put credit spread, and then the call credit spread. And of course, I have one that's a lot further away from the price of the underlying. So the objective of this position, or in order for me to walk away with the entire $295, is that this price or this circle here that represents the price of SPX has to stay in between my strike of 38.55 on this put credit spread and my strike price of 39.60 on this call credit spread. So as long as the price, is in between those two values, if you will, when the market closes today at 4 o'clock p.m. Eastern Standard Time, and that's roughly 3 hours, 4.5 hours from now. So it's 12. It's 12:30, so it's roughly 4.5 hours from now. Yeah, so as long as the price of the underlying stays in between, again, as long as it doesn't go past 38.55 or go above 39.60, I'll walk away with the entire $295. So as you can see here, now we're in the green, right? So now we're in the green. It's going back and forth from red to green. But nevertheless, I'm going to stop the video here. I'm going to come back at 1:30, an hour from now, to show you guys where the price of SPX is in relationship to my 38.55 strike price on the put side and my 39.60 strike price on the call side. So stay tuned. Okay, so we're back. It's roughly 1:35 p.m. Eastern Standard Time. Turn down the music here a bit. So just want to show you guys, update you guys on the trade. So this is where the current price of SPX is with respect to my strike price on the call side. So as you can see, it's somewhat close, but nevertheless, I'm still going to let it run. We got until we got 3.5 hours left. I'm sorry, 2.5 hours left in the market. So again, going to let it run. I'm looking at the indicators that I look at. So this here is the advanced decline indicator that I look at, and essentially that looks at the number of stocks that trade on the New York Stock Exchange that are advancing minus the number of stocks on the New York Stock Exchange that are declining. And so whenever you see that number is a negative sign, that means that there are more stocks declining on the New York Stock Exchange versus advancing. And then I'm also looking at the volume that's in the overall market as well. And again, so things are looking okay, right? It's a little uncomfortable. It is rather close, but nevertheless, I'm gonna hold the position. Not gonna sell out of the position, and I will come back at roughly 2:30 to see where the market is. All right. All right, we're back. Give you guys an update. So it is on my clock 2:08 p.m. Eastern Standard Time. So as you guys can see here, the price of the underlying actually pulled back, right? So remember, it was roughly around here during the last update, and as you can see here, it has actually pulled back. So we are looking good. We are looking good. Let's look at the P&L. So remember, I took in $295, so I have made roughly 41% of that. 47% of that is going up and down. So that's roughly $140 of the $295 that I've made. Now, normally, I would probably look to get out of the trade at this particular moment, but considering that I'm recording this, I want to push the limits, if you will. I'm going to let it run, and so we'll see during the next update, which will be an hour from now. So I'll come back at around 3 o'clock, and that will give us 1 hour before the market closes to see where we are in the trade. But again, it's looking good. There's another way to look at it as well, real quick. Look at the analysis on the curve, and so this is specifically for the this particular trading platform here. So this gives you a nice representation of where we are. So anywhere in between here, so anywhere in this green zone, I'm making money, right? And so ideally, you want the price of the underlying to be, smack dab in the middle of your strike prices, right? So remember the strike prices I mentioned, that the price has to be in between in order for me to make the money, are 38.55 on the put side, right? That's our put side, and then 39.60 on the call side, right? So that's the call side. So again, I'm going to come back approximately 1 hour from now to give you guys an update as to where we are in the trade. All right, guys, so we are back. It is 3 o'clock, well, a little after 3 p.m. Eastern Standard Time, right? So we got a little less than 1 hour before the market closes. And as you can see here, we are still looking good, right? The trade is still doing exactly what we wanted to do. And what is that, Eric? What do we want the trade to do? Or what do we want the price of SPX to do? Well, of course, when you have an iron condor on, now, of course, I have, as I mentioned earlier on, I have this this vertical call credit spread on as well. And so, it sort of got two uh, uh, call credit spreads on, and also we have one vertical put credit spread on. But nevertheless, um, so as I mentioned before, in order for me to walk away with the entire $295, as you can see here, I'm up to 73% of the 295. So if I was to close the trade out right now, I could walk away with $216. But again, because I'm recording this, and I want to give you guys the opportunity to see, how the options trading actually works. I'm going to push the envelope here and allow it to expire worthless, basically meaning that today is the expiration day, September the 15th. And so I'm just going to let the market, I'm going to let it expire, at when the market closes at 4 p.m. Eastern Standard Time. And so I'm able to walk away with the money if the price of the underlying stays, again, above my strike of 38.55 on the put side, and it stays below my strike of 39.60, right, on the call side. And so it looks like the price of the underlying is really just moving sideways. If we look at the chart here, it's pretty much just moving sideways. Well, it's starting to come down a bit. It's down roughly a little over 40 points. However, in reference to the positions that we have on, we are still in profit territory. So my next update is going to be at roughly 345, 350. So stay tuned. I'm going to have some additional commentary for you guys, just explaining why I was able to actually stay in the trade, or why I decided to stay in the trade when the price of the underlying was actually testing my my call credit spread. So remember, the price at one point was roughly around 39.35, and so it was rather close to my vertical call credit spread. And so I'm gonna, when I come back at roughly 345, 350, I'm going to explain to you why I decided to stay in the trade and not close it out, not close out this position here. All right, so we're back. This is the last segment of this video, and so I want to show you guys. So we got roughly less than 10 minutes before the market closes at 4 o'clock. So I want to show you guys, where we are in the trade. And I also want to give you some commentary as to why I decided to stay in the call credit spread when it was being tested early on. All right, so here we are. As you can see, the price of the underlying in this case is SPX. So it's right where it needs to be. It's above my strike price on the put side of 38.55, right? So that's on the put side. And then on the call side, it's below my strike price of 39.60, right? And so if we look at the P&L, as you can see here, I've made the $295 that I took in as a credit early on for getting into these multiple positions. So here's a put credit spread, right? Here is a call credit spread, and then further up, I have another call credit spread. So now, the reason why I decided to stay in the trade early on when the price of SPX was roughly around 39.35, and it was rather close to my strike price of 39.60, is because I pay attention to the 11 sectors that make up the S&P 500, right? So the SPX is the index that represents the S&P 500. So I'm trading the S&P 500. So I pay attention to the sectors, right, that make up the S&P 500. So that, does that make sense? Right? So you got 11 sectors that make up the S&P 500. You got the information technology sector, which is represented by the ETF XLK. And an ETF, I'm sorry, the ETF is nothing but a basket of stocks that trade like an individual stock. And so those basket of stocks move up or down. And so what the ETF does, it calculates or aggregates those different price movements, and it comes up with one price to represent that entire sector. So that's what the XLK information technology sector represents. And so the XLK, or the information technology sector, has roughly a 27% impact on how the S&P 500 moves up or down. And so when you have the XLK ETF, information technology sector, in the red, you can pretty much bank on the S&P 500 being suppressed in value, right? So when it was up at 39.35, the XLK ETF was in the red, and so I knew that it would be a challenge for the SPX to continue to increase in value. So the other ETF, or the other sector of the S&P 500, is XLV, or the healthcare sector, right? And so the healthcare sector is actually in the green, but it's not, it's slightly in the green. So that's the next ETF that has the next largest weight, or the next largest impact on how the S&P 500 moves, right? And so it represents roughly 14%, or it has a 14% weight or impact on how the S&P 500 moves up or down, right? And so it's slightly in the green. So again, its impact is not as great as the information technology sector, but nevertheless, it has a pretty significant weight, but it's just barely in the green. So the next sector that has the next highest weight is the financial sector, right, or XLF. And so the XLF, or the financial sector, represents roughly 11% of the S&P 500, and so it too is just barely in the green. And so everything else, you got the XLY, which is consumer discretionary. You got an XLC, which is the communication sector. You got XLI, which is the industrial sector. You got XLP, represents consumer staples. XLE represents energy. You got XLU, represents utilities. XLB, I believe, is materials. And then you have the last of the 11 sectors that make up the S&P 500, which is the XLRE, which is the real estate sector. And so as you can see here, all of these sectors are in red. Basically, they have declined in value. And so because you have the majority of the 11 sectors that determine the direction that the S&P 500 will move, they're pretty much all in the red, particularly the information technology sector having the largest impact on how the S&P 500 moves. That too in red. I was pretty confident that the price of SPX, although it was moving up, it was increasing in value, it would not continue to increase in value, right? Excuse me. It would not continue to increase in value. And so I was pretty confident, in staying with this call credit spread, knowing that eventually the price will probably pull back, or if not, move sideways. And so it pretty much did that. It met my expectation. And so we got less than 30 seconds before the market closes. And so I'm going to walk away with $295 for, several hours of basically just, just looking at my screens here. And also in my other So yeah, so let's just take a look at. So as you can see here, I made the $295, and I also put on a trade in my Thinkorswim account. And so as you can see here on the day in my Thinkorswim account, I've made $260, right? So 260 plus 295. When you do the math, 260 plus 295, $555 on today. So trading for several hours, it's not bad. So ideally, what I look to do is pretty much make between $300 to $500 per day. All right, so hopefully you guys enjoyed that video. If you haven't already, hit the like button and also subscribe so that you'll receive, so that you can view more videos like this and learn how to trade options, or get some idea as to how to trade options and make money in the stock market, daily, weekly, on a monthly basis, by trading options.